It's like right after you leave the lot, it's already worth less.
Yeah.
It's like the worst feeling.
The second those wheels hit the pavement, bam.
Yeah, exactly. It's like instant depreciation. And it makes you wonder, like, what happens if something bad were to happen right?
Right.
Like, what if you got into an accident or the car was stolen or who knows what? And that actually is what we're diving into today.
Yeah.
It's all about gap insurance and whether you actually need it.
It's a big question for a lot of people, especially when you're, signing all those papers for a new car.
Oh, yeah, there's so much jargon.
They're speaking in our language.
Seriously.
Uh,
So to like really break this down, let's just imagine like the worst case scenario, okay? You got this brand new electric SUV. You've had your eye on it forever. You finally decide to pull the trigger.
right.
You sign all the paperwork. It's yours.
Yeah.
You're driving it around for like 2 years, let's say. And then bam,
Oh, no.
some kind of accident.
Yeah.
Happens to everybody, right? It's totaled.
That's the worst.
It's a nightmare. But, okay, so you're obviously upset about the car, but then the real problem hits, because your insurance is only going to give you money for what the car is worth right now.
Right.
And we were just talking about this. Electric cars, especially SUVs,
Oh, they depreciate so fast.
they lose their value like crazy.
It's because those new models come out every other minute.
Yeah, exactly. So like your 2-year-old SUV, it's practically ancient history in car years.
Basically. So let's say that SUV was like $35,000 when you bought it. You put $5,000 down and financed the rest. Pretty standard, right? But now 2 years later, it's totaled, and the insurance company says it's only worth $21,000. But you still owe $25,000 on that loan.
Ouch. So you're stuck paying $4,000 for a car you don't even have anymore.
That's the gap.
Okay, yeah, that's a pretty big gap.
That's where the gap insurance comes in.
So it's basically like a safety net, but for your car loan.
Yeah, got it. But one thing to remember is that gap insurance isn't always called gap insurance.
Oh, really?
Yeah, sometimes you'll see it as loan lease coverage or residual debt coverage or something like that.
Oh, wow. So many different names for it.
Right, and the other tricky thing is that the coverage amounts can vary too. Like I know farmers insurance, they offer up to 25% of the car's depreciated value.
Okay. That's really good to know.
Yeah, it's always good to shop around and compare.
Definitely. So it seems like if you're financing a newer car, getting gap insurance is a no-brainer. But are there times when you wouldn't really need it?
Absolutely. Like if you put down a really big down payment, like half the cost of the car, or if you're driving a car that's already a few years old, the depreciation hit won't be as bad.
Oh, that makes sense.
Yeah. So gap insurance might not be as necessary in those situations.
So it all boils down to like your personal situation, right?
Exactly. You got to
Well-
think about the car you're buying, how much you're putting down, what your loan terms are.
And definitely do your research, compare different policies.
Yes. Don't be afraid to shop around. It's your peace of mind and potentially thousands of dollars on the line.
So true. Well said. And for our listeners, something to think about. What about leasing? How does gap insurance work if you're leasing a car instead of buying it?
Ooh, that's a good one.
Something to ponder.
Definitely.
All right, everybody, until next time, happy driving.
Stay safe out there.